welcome to Sectors Up Close. I'm Elena Casas. As the UN Climate Summit in Glasgow moves into its second week, we're focusing on how you can invest for a greener planet, away from the most obvious plays like clean energy. And my guest is Joachim Klement, Strategy and Sustainability Analyst at Liberium Capital. Well, last week, banks and money managers representing $130 trillion in assets promised to align their investments with net zero by 2050. And big asset managers are seeing demand for ESG investing soar. BlackRock, for example, recently launched a $600 million fund for climate projects, while investors in energy firms are taking an increasingly aggressive approach, like that of hedge fund Engine No. 1, which won over Exxon shareholders to support its efforts to overhaul the oil majors' board and prepare for a future free of fossil fuels. But while renewable energy projects like wind and solar generate an obvious return, politicians want the financial sector to look into the environmental impact of investments far beyond energy.
Investors need to have as much clarity and confidence in the climate impact of their investments as they do in the traditional financial metrics of profit and loss.
So, what other sectors are poised to benefit from the ESG boom? To find out, I'm now joined by Joachim Klement, Strategy and Sustainability Analyst at Liberium Capital. Hi Joachim.
Hello.
So, aside from the obvious play of buying clean energy, what other sectors are poised to do well here?
I think besides, as you said, the obvious sectors, there are a lot of kind of supply side sectors, infrastructure related stocks that should benefit from the necessary changes to our economy. A quick and easy way to think about it is to look at the SPDR S&P Kensho Smart Infrastructure ETF, which originally was designed to look into companies that benefit from smart buildings and smart infrastructure like roads, bridges, etc.
Well, if we take a look at that ETF, it's up, I think, 13.8% in the last quarter. So what are your specific picks for retail investors in here?
So in general, these stocks tend to benefit from the electrification of our economy in various ways. And it tends to benefit from becoming more efficient. Look at a company like Johnson Controls International, air conditioning, ventilation technology, trying to kind of get the best climate inside buildings in order to deal with probably hotter outside. Other companies that might be interesting are Badger Meters, which is in water measuring, water meters and water efficiency solutions.
And you've also been looking at Rolls-Royce, I know, which has signed a deal yesterday with the British government in which the government is going to invest $238 million in building small nuclear reactors. That seems a pretty controversial ploy. Do you think this is going to work?
I think so. Rolls-Royce is actually one of my most interesting picks, I would say, when it comes to benefiting from a more sustainable economic development. First of all, Rolls-Royce is the world's second largest jet engine maker and has proven that its jet engines can run on 100% sustainable alternative fuel. So it is basically ready to replace kerosene with non-carbon producing alternative fuels. On top of that, Rolls-Royce has a lot of know-how in nuclear technology historically. And what they're working on is developing over the next 5 to 10 years these small nuclear reactors, which the government of the UK just promoted with a research grant over the next 10 years to bring them to market. And these small nuclear reactors actually have a very big advantage. First of all, they're obviously low CO2 or no CO2 emitting energy sources that are stable and reliable. And they are the nuclear reactors that are physically unable to have a nuclear meltdown like we had in Chernobyl or Fukushima. So they're much safer than a traditional nuclear technology.
Politically, though, are governments going to spend on nuclear technology, however safe it is?
That is a big, big if. And we're just in this process where the European Union, for example, tries to figure out whether it should consider nuclear power as a clean power technology in Europe. The Germans obviously are against it. The French are very much in favor of it. And I think in a country like France, but also in the UK and in the US, it will be a matter of time, but it will come that nuclear power will play a more important role in the energy supply.
More broadly, with these types of infrastructure innovations, from the perspective of a retail investor, they're pretty long-term plays, aren't they? And aren't they dependent on government either spending or regulation, which might not happen?
Absolutely. These transitions of, for example, smart buildings, to go back to the SPIDER ETF that we talked about, they're not going to happen overnight. They're not going to happen over the next 12 months. That's a 5 to 10 year transition. For example, in the UK, we have to renovate about 3 to 3.5% of all our buildings, commercial and residential, every year and make them more energy efficient over the next decade to come close to our climate targets. Without government regulation that fosters this kind of energy efficiency improvements and renovation activities, that is going to be very difficult.
So not returns that necessarily be guaranteed?
No returns are ever guaranteed.
Thanks so much for that. That was Joachim Klement, Strategy and Sustainability Analyst at Liberium Capital. Well, before I go, here are some of the key stories making headlines in the sector. As COP26 talks move into their final stretch, poorer nations most at risk from climate change are raising the pressure on wealthier ones to pay up for the mounting damage caused by storms, cyclones, droughts and floods. The Foreign Minister of the Pacific island of Tuvalu addressed the conference knee-deep in seawater as the target set in 2015 of $100 billion a year for vulnerable countries still hasn't been met. In Germany, Greenpeace filed a lawsuit against Volkswagen this Tuesday, saying the car maker is failing to do its part to combat climate change. They want the firm to end production of internal combustion engines by 2030. It comes after a German court ruled in May that the country is failing to protect future generations from the consequences of climate change. And Shell is teaming up with Norsk Hydro to jointly produce hydrogen from renewable electricity in a bid to decarbonise their own operations as well as supply heavy industry and transport. The companies are looking into European locations to produce renewable hydrogen that could be used in cars or as an alternative to natural gas. And that's your roundup of sustainable investing outside of clean energy. I'm Elena Casas, and this is Reuters.